please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
But another big news was the Sebi board meet. Sebi has allowed all exchanges to offer stocks and commodities trading from October 2018. That's not all. The market regulator, in a slew of reforms, also announced easier access norms for foreign investors, capped cross-holdings in credit rating agencies as well as mutual funds to safeguard the investors' interest. However, Sebi decided to hold further discussions on its proposed norms, mandating listed companies to make immediate disclosure about their loan defaults. So that is something we need to watch out for later.
There was a discussion on the subject. It was discussed at length. I must say that in August 2017, when we issued it, we issued at our own volition. I mean, no one really asked us to issue. So it's not something that we felt as a concept. It is good. In terms of implementation issues, it was discussed at length, but it requires further discussion. So it has been deferred by the board.
Okay, and Yash Jain, who was tracking that meet closely, is here with more details. Yash, tell us, the debt restructuring or the debt default disclosure decision has been deferred yet again. But what were the other crucial decisions that were taken at this Sebi board meet?
Well, it was certainly a heavy-duty agenda which Sebi chairman Ajay Tyagi tackled, and the biggest headline coming from Sebi board meeting has to be that market regulator Sebi has given its approval for universal exchanges. This was something which both equity exchange, be it BSE or NSE, had shown interest in. Now, essentially, with this approval for universal exchanges, both BSE and NSE will be allowed to start a commodity exchange under the same roof with the equity exchange. And of course, on the other side, both commodity exchanges, MCX and NCDEX, will be allowed to enter into equities. Now, this convergence towards universal exchanges can be done from October 2018. Also, market regulator Sebi announced some new regulations as far as the mutual fund space is concerned, where Sebi has very clearly barred mutual funds or asset management companies from holding a board seat as far as another mutual fund or asset management company is concerned. They've also said that one particular company cannot hold over 10% in more than one mutual fund or asset management company, and a direct implication of this particular regulation could be that companies like PNB, SBI, Bank of Baroda, LIC will have to pare down their stake and bring it down to 10% as far as UTI mutual fund is concerned. Sebi also gave some important regulations as far as the credit rating agency is concerned, where it has barred one credit rating agency from holding a board seat or any sort of board representation. As far as another credit rating agency is concerned, it has also capped the cross shareholding between two credit rating agencies at 10% and has also raised the minimum net worth required for credit rating agencies to 25 crore from the current amount of 5 crore. Sebi has also approved the listing of asset reconstruction company or ARC receipts, though we need more clarity as far as which are the market segments which would be allowed to trade in this new instrument of asset reconstruction company receipts.
All right, Yash, we also spoke to a whole host of experts and representatives of the sectors that will be impacted by these decisions.
There are technical issues here involved because the default can happen for so many. Then under RBI's regulatory dispensation, 90 days is allowed. So if allow after 1 day, there could be chaotic situation. So everybody, disclosure is good, but then sometimes the disclosure without knowing the context can create systemic issues.
It's a positive move. This is something that I've said was expected. And I think NSE would certainly be ready to get into commodities once permitted. At the end of the day, you want any exchange platform to permit to trade all asset classes. It just gives members flexibility, and it certainly consolidates liquidity to the extent that that is actually the outcome.
We fully are prepared, and we believe that this is the path that Sebi wanted all of us to take. This is part of what was started and has been discussed. So, A, it's not a surprise. B, we have been preparing for it. And more importantly, we have already also represented to Sebi what we believe will be need to be done before this deadline of actual sort of merging the two exchange streams. Basically, in terms of making sure that there's a level playing field between the overall commodities markets and between what the other securities markets are.
The intention is that SR should be more liquid. See, today what happens is ARCs will have to hold on their mandatory minimum, which is 1585 structure, 15% they have to hold.
Yes.
But the 85% which is remaining with the beneficiary bank, that is, as on date, is illiquid. But it will remain illiquid unless SEBI expands the definition of the QIB, who can trade and use SR.